Live from San Diego, this is KUSI News.
President Trump has proposed a 50-year mortgage plan as a way to make homeownership more affordable for especially entry-level home buyers. Here to tell us about the pros and cons of the idea is California real estate broker Mr. Mark Powell. Good morning to you, sir.
Good morning, Paul.
I say the 50-year mortgage. Your immediate reaction is?
It's an option for people who can't afford to purchase a house because they don't make enough money, so they don't qualify for the 20 or 30-year mortgage. What it's going to do is going to lower their mortgage payment. Some have estimated $200 or $300 a month, but they're going to be paying this mortgage over the course of 50 years. So they may double the amount of interest that they're going to pay during that time. So it's an option. So when you look at buying or selling a house, buying a house, the lender is probably one of the most important people involved in the process, because without the loan, they can't get the house. It's like going to a restaurant. If you don't have money, you can't buy the food. So
right.
Same thing. So the lenders now have another tool in their toolbox if this goes through, because you got to change the law. Right now, most lenders aren't allowed to give a 50-year mortgage. But like we were discussing off camera, this is not a new concept. Japan had a 100-year mortgage during their bubble time.
Yeah, but didn't they go belly up there?
Yeah.
Wasn't that part of the reason?
It didn't work out. Yeah. And then I found out recently that Fannie Mae might be dropping this month their FICO score requirements. You have to have a 620.
But that takes us back to the ninja loans, and when we got into this whole mess to begin with, it crashed so many of those financial institutions. Why would we? Is it that nefarious that would lower housing prices if we crash the housing market?
I think the overall goal is to get people who can't afford to buy a house into a house. However, if you lower that requirement, you're going to have many more people being able to qualify for a loan to purchase a house. So now you have that many more buyers trying to purchase this house. So guess what happens? Home prices go up.
Skyrocket.
The government just failing to understand. It's not the loan. It's not the buyers. We don't have enough homes. They have to start building more homes. This is completely a supply-demand issue.
The mortgage element is a side issue in your view.
Well, there's pros and cons, because if you look at your finances, mortgage interest deduction is one of the biggest deductions you have on your taxes.
Right.
So let's say that you're paying this mortgage, okay, and I mean you're paying the interest instead of paying for rent, because if you don't do this, you're just doomed to be a renter forever.
Yeah, well, first of all, no one's ever going to pay off. I mean, the era of buying your home and 30 years later paying it off and working at the same factory, that part of Americana is gone. Yeah. No one's ever. People are going to get off that 50-year mortgage and sell it. The equity will be less than what they would be for a 30-year mortgage, but at least they're on the conveyor belt, and at least their costs are fixed. Whereas if you're a renter, every year you're going to get jacked up a few.
100% correct. But think about this. The average buyer in San Diego now is over 40. It used to be around 30. So, do the math. You're 42 years old.
You're not going to live that long.
You're going to be 92 before you pay off your loan. Now, and you're going to not build up any equity, because you're paying the first 30 years is going to be primarily interest. It's how much equity you have. But you can have some flexibility. It doesn't mean that you have to wait 50 years to pay off your loan. You can make bigger mortgage payments
as you make
and bring that term down, or you can refinance at some point. So there's pros and cons. It's going to allow more people to get into the market. However, they're going to be paying a lot more interest, and it's probably going to drive home prices up.
So as we wrap this conversation up, who should people talk to about whether or not they should get into a 50-year mortgage or not?
That's your lender. Your lender is going to qualify you, and the lender is going to say, you don't qualify for a 30-year loan. You say, oh, I can't buy a house. And they're going to probably say, well, wait a minute. You can do a 50-year mortgage. Your payments are going to be lower every month, but you're going to pay twice as much for the home over the course of 50 years if you live that long.
I would still think it would be a safer tool than, say, a mortgage that has a balloon payment or interest-only payment. I still think you're money ahead if you do the 50-year. Would you not be?
You would be. And look, it's just an option. You don't have to do it. You don't even have to buy a house. But people who can't afford a house because they don't make enough money, and that's the ticket right there. They don't make enough money to buy a house. Remember in 2008, they don't make enough money to buy the house. Yeah. So we're going to kind of move the system a little bit, lower the FICO scores, give you 50-year terms, and now you can afford the house. but can you maintain the house? Can you pay property taxes? There's a lot more involved than just the loan.
Well, Mark, we have to call it a conversation there. To be continued. We'll see how this all plays out.
Sounds good. Thank you.